G'day guys, welcome to the channel. My name's Tim, and on today's episode, we're taking a look at Bitcoin and its correlation with the stock markets. So I'll be presenting my theory on how Bitcoin is correlated to not only the Dow Jones, the NASDAQ, and the S&P 500, but how when you overlay them, you can actually see even more correlations about where they're bottoming, where the peaks are, and how long it takes to get to the peaks. And I'm going to give some insight at the end of the video about where we are in our current peak and where things are likely to go over the next 1.5 years. So this should be an interesting one. All right, so let's get stuck in. So first of all, let's take a look at Bitcoin. So this here is a Bitcoin weekly chart going back to about September 2011. And you can see here we have the 200-week moving average, which is no secret, does show the bottom of Bitcoin at various points. You'll also notice that the 200-week moving average only ever has gone up, and it's continuing to go up. So this is a very important moving average to keep an eye on. But there are a couple points I'd like to draw your attention to. First of all is here, September 2011. This is where Bitcoin bottomed. And then we had this run up where we had the double peak in 2013. It then bottomed again around August 2015. And then we had another run up to the 2017 peak up here. It then went down, and you'll notice there was a capitulation event right here around as we're getting close to December 2018. And that's where the bottom was. And then we had a small little peak here in 2019, followed by the Corona crash here in March 2020, and now we've gone up again, and we peaked around April 14 in 2021. Okay, so that's Bitcoin. Now remember these dates: September, August, December, and March. Let's take a look at the Dow Jones. So we're looking at the Dow Jones over a similar time frame, and you'll notice that the Dow Jones also bounces off this moving average. Now, we're looking at a weekly chart here, and I'm looking at the 130-week moving average, which is basically 2.5 years. So the Dow Jones being a much more mature stock market, I'm using a longer time frame, but you'll notice that it does bounce off this moving average. And look at these dates. We're bouncing off it in September 2011, then we bounce off it again in August 2015. It actually did a little double bounce here in January as well. We then did another bounce here in December 2018, and then we did another one in March 2020. Now, this 4-year cadence, or 3 to 4 year cadence, is no fluke. If I zoom out and look at the Dow Jones over a 100-year period, you can see there is a 3 to 4 year cadence that it consistently follows, bouncing off this moving average, and it's been doing that over the past 100 years or so. So this is something that the markets do for whatever reason. Now, I have a theory it might be tied to the US election phases, but for whatever reason it is, this is what markets do. Every 4 years, they bounce. All right, so that's the Dow Jones. Let's have a look at the NASDAQ, the tech stocks. Again, September 2011, bounce. August 2015, bounce. Again, it did that little double bounce with January 2016 there as well. Then another bounce here in December 2018, which is roughly about 3.25 years from August. Whereas this gap here from September to August is basically 4 years exactly. We then had the Corona crash here in March 2020 again. Let's have a look at the S&P 500. Again, September 2011, August 2015, January 2016, December 2018, March 2020. We'll go back to Bitcoin. The dates are the same. These are the bottoms. So what this indicates to me is that the bottoms of Bitcoin are correlated with the markets in general. All the markets that we've just looked at all bottomed at these exact points, okay? Now, they're roughly 4 years apart. Sometimes they're three and a bit. the corona crash put a bit of a spanner in the works for that one. All right, so what I've got here is I've overlaid the Dow Jones and Bitcoin together so we can see these correlations and how they line up. So you'll notice again, September 2011, they line up with the bottoms. August 2015, they line up with the bottoms. December 2018, they line up with the bottoms. And March 2020, they line up with the bottoms. Now let's have a look at the peaks. So we notice that between September 2011 and August 2015, the Dow Jones has this cadence where it bounces up. It doesn't go that high compared to Bitcoin, but it does work its way up, and then it comes back down. Now, halfway through that, that's where Bitcoin thrives, essentially. And I measured the time from the bottom here to the peak. And in this case, it was 116 weeks from here to here, from the dip to the tip. So we did have a mini peak before it in 2013, but the main peak was 116 weeks. You'll then notice the price goes down and it actually takes its time. You look at this, it takes about somewhere between, I think it's about 2 years. It actually takes about 2 years for the price to go down. It goes down nice and slowly and evenly until it reaches a bottom here in August 2015. Now, this is a little bit different to what happened in 2017 and 2018. And the reason for that is because the time frame between here, August 2015, and December 2018 is about 3.25 years, as opposed to the full 4-year jump between these two dates. So from August 2015, it actually takes about 119 weeks for the price to reach its peak at the end of 2017. And then you can see it takes its time, just like it did in 2014, this period over here. It takes its time on the way down. But then at this point here, you notice there's a capitulation event. And it looks kind of strange how it just came out of nowhere. Now, you'll notice that at that same time, the Dow Jones also dipped. So Bitcoin was probably going to just take its time and do its thing, working its way down and maybe work its way up again. But the markets in general all collapsed on that same date, and Bitcoin was no exception. So it was brought down by the other markets. So that took exactly 12 months to that point, whereas in 2013, 2014, it took about 2 years and went down nice and slowly. So now let's have a look from this date. From December 2018, it took 120 weeks to get to this main peak in 2021. Now, this is the same time, pretty much the same time frame that it took for the 2017 peak to be reached and also the 2013 peak to be reached. And you notice we had the double peak there. And a lot of people are asking the question whether we'll have a double peak in 2021. And the answer is we already have. This is peak 1, this is peak 2. So the question then is, will we have a triple peak? And that's the question that we can't answer at this stage. Okay, so I want to show you one more thing. Now, I just want to show you how closely these are correlated. Let's have a look at 2017. Just look at the shape. Look at the shape of the Dow Jones here. This spiky bit right here in the Dow Jones at the same time that we had this big blow-off top, big spiky top, okay? And then look at in 2021, the Dow Jones has got a more rounded top, just like Bitcoin. So it's almost like even the shape of the stock markets are correlating with the shape of Bitcoin. And that might explain why this peak looks different from this peak. And it's because the market this time around looks different from the market back then. So, I mean, this is fascinating stuff. So what this says to me is that the theory of diminishing returns is most likely correct, but the theory of lengthening cycles may not be correct if this theory is correct instead. So we'll have to see how things play out over the next couple of years. But to me, there's mounting evidence to show that Bitcoin is extremely strongly correlated with the markets. So the question now is, what happens next? Now, we did have this extra bounce here, which was the corona crash. And the question is whether that has put a spanner in the works on this 4-year cadence, this 3 to 4 year cadence. Now, looking back over the Dow Jones over about 100 years, there's been lots of events that have happened. We've had the Great Financial Crisis here. We had the 1974 crash here. We had the Great Depression crash here. There's been lots of events that have happened over this period of time, and yet the markets still follow this regular cadence. So I think the markets will get back on track. So that means if we treat this as a black swan event and say that this was the real bounce, roughly 3.25 years from 2015, then the next bounce would have to be somewhere in that 3.5 to 4 year range from December 2018. So let's have a look at 4 years beyond that. So that would bring us to December 2022. So let's have a look. December 22 is about here. Okay. Now, the markets might bounce earlier than that. It's somewhere in that range. Somewhere in that 3 to 4 range, the market will bounce. So this could be the date when we see the next Bitcoin bottom. Now, we don't know what will happen next, whether it goes up higher again or whether it comes down again. We don't really know. But based on past history, we should see a Bitcoin bottom around this time. Now, the Bitcoin bottom by that stage might be much higher than it is now. The Bitcoin bottom might be 50,000. We don't know. Well, in this case, I'm just drawing on the graph here. This is just a random spot. We don't know where the bottom will be, but we do know that that is likely to be a bottom. So let's see what the market does, whether it goes up or down, sideways, whatever it does. But those will be the points to look for. So anyway, I hope you enjoyed that video. This is extremely exciting information. I hope other people are as excited as I am. I can't believe what I'm seeing here in the data. So I hope you enjoyed that video. Please subscribe, comment, like, share, all that sort of stuff. And I'll see you in the next one. Cheers.